Bitcoin has become one of the most popular cryptocurrencies, and mining it can be a profitable venture. However, it's not an easy task, and there are some important things you need to know before you start mining Bitcoin. Hello viewers and welcome to this video on Bitcoin mining, how to start and what you need to know. In this video, we will explore the basics of Bitcoin mining and guide you through the process step by step. So let's dive into the video and don't forget to hit the like button and subscribe the channel. Bitcoin mining is the process of creating valid blocks that add transaction records to Bitcoin's BTC public ledger, which is called a blockchain. It is a crucial component of the Bitcoin network as it solves the so-called double spend problem. The double spend problem refers to the issue of needing to find consensus on a history of transactions. Ownership of Bitcoin can be proven mathematically through public key cryptography. However, cryptography alone cannot guarantee that one particular coin hadn't previously been sent to someone else. How does Bitcoin mining work? Mining, blockchain mining, in general, leverages economic incentives to provide a reliable and trustless way of ordering data. The third parties ordering transactions are decentralized, and they receive monetary rewards for correct behavior. On the contrary, any misbehavior results in a loss of economic resources, at least as long as the majority remains honest. In the case of Bitcoin mining, this result is achieved by creating a succession of blocks that can be mathematically proven to have been stacked in the correct order with a certain commitment of resources. The process hinges on the mathematical properties of a cryptographic hash, a way to encode data in a standardized manner. Hashes are a one-way encryption tool, meaning that decrypting them to their input data is nearly impossible, unless every possible combination is tested until the result matches the given hash. So, how is Bitcoin mined? This is what Bitcoin miners do: they cycle through trillions of hashes every second until they find one that satisfies a condition called difficulty. Both the difficulty and the hash are very large numbers expressed in bits, so the condition simply requires the hash to be lower than the difficulty. Difficulty readjusts every 2016 Bitcoin block, or approximately 2 weeks, to maintain a constant block time, which refers to how long it takes to find each new block while mining. The hash generated by miners is used as an identifier for any particular block and is composed of the data found in the block header. The most important components of the hash are the Merkle root, another aggregated hash that encapsulates the signatures of all transactions in that block, and the previous block's unique hash. This means that altering even the tiniest component of a block would noticeably change its expected hash and that of every following block, too. Nodes would instantly reject this incorrect version of the blockchain, protecting the network from tampering. Through the difficulty requirement, the system guarantees that Bitcoin miners put in real work, the time and electricity spent in hashing through the possible combinations. This is why Bitcoin's consensus protocol is called proof of work, to distinguish it from other types of block creation mechanisms. To attack the network, malicious entities have no method other than recreating the entirety of its mining power. For Bitcoin, that would cost billions of dollars. Why mine Bitcoin? In many aspects, Bitcoin mining is comparable to mining for gold. Crypto mining, in Bitcoin's case, is a computer operation that creates new Bitcoin and tracks transactions and ownership of the cryptocurrency. Bitcoin and gold mining are both energy intensive and can produce significant financial rewards. Therefore, you can mine BTC to earn profit/rewards. Some BTC miners build Bitcoin mining pools by combining their efforts with other miners. Groups of miners who work together have a more significant chance of earning rewards and splitting the profits. In addition, members of a mining pool pay a fee to be a part of the pool. Is Bitcoin mining worth it? To find an answer to the above question, please conduct a cost-benefit analysis using web-based calculators to see whether Bitcoin mining is worth your effort. A cost-benefit analysis is a systematic method that organizations use to determine which actions should be undertaken and which should be avoided. First, determine whether you are willing to invest the required initial capital in hardware and determine the future value of Bitcoin and the level of difficulty before committing your resources. It's also crucial to examine the amount of difficulty specific to the cryptocurrency you wish to mine to see if the mining operation would be even lucrative. Is Bitcoin mining legal? If you're wondering whether Bitcoin mining is legal, the answer is yes, considering the acceptance by various jurisdictions. For example, Enigma, based in Iceland, opened one of the world's most extensive Bitcoin mining operations. Crypto mining is considered a business in Israel and is subject to the corporate income tax. On the other hand, crypto miners are considered money transmitters by the Financial Crimes Enforcement Network, FinCEN, in the United States, meaning they may be subject to the rules that govern that conduct. However, in Algeria, Nepal, Russia, Bolivia, Egypt, Morocco, Ecuador, and Pakistan, Bitcoin mining is prohibited. You should always check local rules where you live to find out if Bitcoin mining is legal in your jurisdiction. Is Bitcoin mining profitable? Aside from the choice of hardware, an individual miner's profit and revenue depend strongly on market conditions and the presence of other miners. During bull markets, the price of Bitcoin may skyrocket higher, which results in the BTC they mine being worth more on a dollar basis. However, positive inflows from bull markets are counterbalanced by other Bitcoin miners seeing the increased profits and purchasing more devices to tap into the revenue stream. The result is that each miner now generates less BTC than before. Eventually, the revenue generated trends toward an equilibrium point where less efficient miners begin to earn less than they spend on electricity, thus shutting devices off and allowing others to earn more Bitcoin. So this was our today's video. I hope you all liked this video. Don't forget to hit the like button and subscribe my channel, and also share it with your friends and family. We will be back soon with a new video. Till then, keep supporting and take care.